Hello, everyone, and welcome to episode 4 of our season 2 of our podcast, Law That Leads. I am honored to have Fatema and Mohammed in our office today from Vogue Mortgages. They are mortgage brokers and they have been helping clients in the Toronto area with all of their financing needs for the last decade. Their team is amazing and they have access to over 120 lenders, including alternative, A, B, and private lenders, and have successfully financed over $100 million in mortgages. Whatever your situation is, I'm pretty sure they will have a solution for you and they will help in any way they can. So without further ado, we'll welcome Fatema and Mohammed.
Appreciate it.
Yeah, thank you for having us. We're excited to be here.
Yeah.
So are we. There's a lot to talk about.
Yes.
There's a lot going on. We always have clients sort of, the spillover questions. Interest, there's a lot of movement, especially in the last year with interest rates, and I'm sure there's some more coming up. So tell us a little bit more about that.
Yeah, I think it's an interesting time to say the least. I think, on the back of like 9 consecutive rate hikes,
Yes.
sort of an unprecedented situation where you have this steep rise of interest rates, people not knowing what to do, market activity coming to a standstill. We're kind of at that stage where there's light at the end of the tunnel now. And so, we've seen 2 rate cuts happen over the last few months. There's another announcement this Wednesday that people are expecting a pretty significant cut if we're going to follow suit with what the U.S. has done, and with more cuts promised before the end of the year. And so that light at the end of the tunnel, light at the end of the tunnel situation is people realizing, okay, cuts are going to start happening. I don't think we've seen market activity pick up yet. I think people are still on the sidelines waiting for something to happen. Exactly. But things are moving in the right direction. And so there's hope in that, okay, let's get off the sidelines. Let's start looking again in anticipation of these rates coming down. And you're seeing it on both sides. So for people who aren't familiar, variable rates are tied to the Bank of Canada's announcements. And so as those announcements happen, you'll see the variable rates come down. But fixed rates are tied to bond yields. And so while they're not directly impacted by these announcements, there's typically a ripple effect that happens a couple weeks, a couple months after that fact. And so, but again, generally, you're seeing both of these rates start to stagger lower and lower. And it's all positive. There's nothing bad about rates going down.
Yeah, it is great. And I guess just to add, what happened during COVID was like a black swan event, right? We're not going to see rates go to like that 1%. I guess the best forecast, where I think the economy will thrive is like in the 3s is where, it's healthy for everyone.
Or the new norm.
Yeah, probably the new norm.
Yeah.
I think so. Yeah.
I was just going to say one other thing. I think you're probably following inflation numbers, right? Like that was the ticker symbol that everybody had that they were looking at to see how it was trending. And, when we were in the 3%-ish, things were difficult and they weren't heading in the right direction. And that's why these aggressive rate hikes happened. Now, I think last month's report was 1.6%, which is enormously positive, below the 2% target.
Right.
So that's the kind of things that we want to see to be able to anticipate that rates are going to further decrease. To close off that thought, I think all the stars are aligning, right? Inflation's coming down. You've seen the downward trend of rates. Market activity hasn't picked up as much as the government would like. And so there needs to be this like momentum push to happen to be able to foster that activity. And a lot of the people, like I mentioned before, who have been sitting on the sidelines waiting for these rate cuts to happen now feel like, okay, we're on the cusp of it. So let me jump back into the market before it cuts too much and then prices jack up again.
And then we're back to that bidding war situation where, 10 offers, 20 offers on a property and you really can't get anything at that point.
Yes, and speaking of the bidding situation, for us on the legal side, it's a very scary environment because we have clients that, when you're in that bidding situation, you're trying to take off all the clauses as possible because the seller, you want to get the house, this is your dream home, and, you want to make it more enticing for the seller to say yes to you rather than someone else. And we have clients to this day that, one of those most popular clauses to be taking off is the home inspection, right? So for us on the liability side, now the seller has absolutely no warranties, no, there's nothing at all, and it all falls onto the buyer. So there's a lot that could be going on with the home, molds, flooding, you name it, it could be there, and there's no protection for these buyers. So we certainly hope on our side that time never returns. But then also it's a very stressful environment for just any buyer to be a part of it.
Yeah.
Yeah, I think what's most interesting to us is like we often butt heads with realtors, right? Like I think we find ourselves at odds end. I think everybody's got the best interest of the client in mind. Like from a realtor's perspective, like how do I help this client win this house? Right? They've been searching forever and we want them to be able to find their dream home. On our end, we see the clauses like inspection clauses or financing or status certificate review. These are all like protective measures to make sure that the client is insulated from whatever could go wrong for that house. And so as much as we'd like to say, we've qualified you, remove the financing condition, there could always be a surprise that either comes up in their credit bureau, comes up from the lender side of things that you can't anticipate until it's actually being underwritten. And so oftentimes it's a
battle.
We're all looking out for the client to make sure that they have a successful transaction. But oftentimes, at least in this market, we're starting to see conditions come back.
Yes.
If we find it's a buyer's market, they have the flexibility to be able to do those things. But I think, like I mentioned before, we're on the cusp of this, like, when is that
the perfect time?
Yeah, the perfect time. When is the swing or the pendulum going to go in the opposite direction where it now becomes a seller's market? So that's why the people who have been on the sidelines are now jumping in, leveraging those protective measures to be able to do it and try to find a property within reason, but all for the right reason.
And speaking of, I guess, the market, there's always this conversation. It's a buyer's market or seller's market, which is sort of the most popular terms you hear. If we're in unprecedented times and, unique times, and how do you deal with that? Does it matter for your industry?
Yeah, I think, you know what, it's, okay, so first, I think the buyer versus seller market is like very geo-specific. Like if you're in the downtown core in a very popular area, some of those houses will just sell like hotcakes. But if you're in, our own street, for example, it's got like 6 houses for sale at the same time. And so the likelihood that, it's a seller's market in that pocket, very unlikely. I think from our perspective, we have to be as transparent with the clients as possible. So when you're going into these offers, understand the risks associated with removing those clauses. And so, to your point, if I remove an inspection clause, I shouldn't be upset that if I find water in the basement after I close on the home, right? And so, again, these things are protective measures. When we talk about the risk assessment thing, the idea is that, okay, look, we've qualified you with an A lender, everything checks out, everything looks good. Heaven forbid something doesn't turn out right. Be prepared that we may go to an alternative or private lender that's more flexible, but understand the risks associated with that. It might be a higher rate, it might be, X, Y, Z. And so when we push for these conditions, all we're asking for is 3 to 5 business days. Give us enough time to get you a formal approval, underwritten, have that confidence, and then you can remove the conditions. But again, that battle that we have is just in the best interest of the client. And that's why oftentimes it's always like, don't get emotionally involved with the home. Be confident enough or flexible enough to be able to walk away from it if it doesn't check off the boxes you're looking for. And so I can also appreciate there's a lot of moving pieces for a client. If I've looked at 20 homes and I finally found one that I love, I may get emotionally involved.
Yeah, exactly.
But it's a balancing act, and all we can do is help educate and represent them the best we can in their corner.
Exactly.
But yeah.
It's also the patience. I feel like, in a stressful environment like that, you're going to run thin with your patience, and you're just maybe in a rental right now, not even in your own home. Maybe you're family planning, you're about to have a new addition to the family, and you just want to get into this new home. And I could see how, sometimes the rush decisions will be made based on your own factors, what's going on for the client. But we always get this question I always notice a difference between first-time home buyers and those experienced 100%. Clients that have bought and sold 3, 4 homes, 10 homes, whatever. There is definitely a different attitude, but recently we're noticing that a lot of our first-time home buyers are also newcomers to Canada. Right. So it's not just dealing with answering the questions or explaining certain things that might feel common sense for first-time home buyers. Now there's also the cultural expectations that you have to manage with newcomers. You know, especially on the condominium side, we have clients that just think they're buying an apartment in the air, just like it is back home. Not a big deal. Not even realizing there's governing documents. And if you go to a real estate lawyer to be reviewing your status certificate, that's going to be a very 1-minute brief review. You know, the real estate lawyer doesn't necessarily know where to begin to understand the condominium structure, and then let alone differentiate between the governing documents between the different condos. So that's the number one thing we focus on, because at the end of the day, from a legal perspective, it's all on the buyer. So if the buyer doesn't do their homework 100%, the seller has no obligations. It's sort of a done thing.
Yeah, sorry, I just want to touch on that because I can't stress that enough. I think the most important thing for whether it be newcomers or repeat buyers or people who have done this before, that team that you have in your corner, the combination of the realtor, the mortgage broker, and more specifically the lawyer, I can't stress how important that is, because these status certificate reviews are like make or break situations. And if they're not done properly, you know, often people don't know this, but some lenders actually blacklist buildings. There are instances where they're unwilling to fund these properties because they've been mismanaged. The condo corp hasn't done a good job. You know, there's been special assessments that are happening on these properties. And so that's where, you know, having somebody like a lawyer go through this with a fine-tooth comb, find that anomaly, can save you from buying a property that's going to be, you know, have future, ridden with future issues, unable to sell, etc. But it's very important to have the right team in your corner.
We obviously agree, and we've started off, as you know, we've started up the new initiative. Whenever it's a condo deal, it comes to the condominium department first. Doesn't even go to the real estate department. Amazing. Because if you don't understand this and you're not informed on this side of thing, for me as a condominium lawyer, I could care less whether you have clean title at the end. Because, and I find, even though we've come up with services that are more cost effective, especially for newcomers or first time home buyers, there's already so many costs involved. But at the end of the day, it is a very time consuming exercise for us to be reviewing that status certificate with a fine-tooth comb. I'm going through most recent litigation, I'm going through recent decisions, I'm going through everything you could think of to make the client aware. And sometimes it sounds very scary for them. They're like, oh my God, could this happen? And I have to say, no, this is worst case scenario. Could it happen? Yes. Will it happen? Most likely not. But, you know, you just have to be aware. So we go through all of that first and then get to the point, and then it passes on to the real estate department. And because of the cost, I always say this to them. I say, I've seen the worst of the worst in condominium litigation. I've seen clients where the condominium is not going to issue you a clean status certificate. You cannot sell your home, move somewhere else. So your options are you either vacate and you're renting somewhere else, which is a very high cost to be carrying. And you're also tied up in litigation, which is thousands and thousands of dollars. So do you want to spend a few $100s now and be better informed and get all that extra information, builders, you know, everything under the sun? It's not just about the status certificate. As you said, the reputation of the building. We all know that property managers prior to 2015 didn't even have a license, were not even regulated. How many condominiums suffered by, you know, property managers that were unethical? You know, even now with licenses, it still happens, obviously not to the same rate, but how important is that for you to understand that? I also had a client who thought she was buying into this heritage building. I don't want to say where. You know, it had all the great reputation, everything checked off, on paper was amazing. She moved in with a 12-year-old child with special needs. He was the only child in the building. Everyone else was retired, wanting the peace and quiet. So, you know, having a special needs child in an environment like that it did turn very bad very quickly, because you're used to a certain lifestyle and this person moves in, it's very different. There's bound to have friction. And I don't blame either side. It's just one of those situations where you're in the wrong environment, right? It's like being at the wrong job with the wrong coworkers. You don't mesh. So so those types of things, even though it's not on a status certificate, no one's going to tell you on a status certificate, this is, unless it's been designated as a seniors community, you won't have a note. But we go that extra mile. We will contact the property manager for you, and we will describe your unique situation. And we'll say, is this going to be the right fit? If not, they don't have an obligation to answer, but for us, it minimizes the risk. And that's all that's important. If you just have proactive risk management, it's a lot of problems could be solved, right? Instead of leaving it to the last minute and reacting to what is wrong, you could very well prevent or at least minimize.
Yeah, what you're describing is not very common practice. It's, I'll get another file on my desk. Somebody will status certificate review it in 5 minutes, to your point.
Right.
Looks okay to me and move on, but that extra step in understanding, does that environment make sense for them, just makes for a much more informed decision on
exactly to that extent. That's amazing. Yeah.
So we touched a little bit on the conversation, newcomers, first-time home buyers, experienced buyers, but reality is there's so many new rules that it's hard to keep up. So tell us a little bit more about this and clarify it for everybody.
Yeah, so I think effective December 15th, we have something exciting coming up where back in the day for insured mortgages, you could only purchase for under $1 million if you're putting less than 20% down. But now with the new rules coming in, you can go up to $1.5 million and still put, less than 20% down. So that's exciting. I think, it opens up, an array for people who are looking, where they have the income, but they necessarily don't have the down payment. And so that helps them, qualify for a little bit more than what they were previously.
Yeah. I think for context, let's put aside the political landscape and whether these changes are as a result of trying to, garner votes. But I think we're kind of at this point where we realize, the $1 million cap doesn't make sense anymore, right? And so it's sad to say this, but 1.5 million may be the new norm for first-time home buyers to try and get into the market. And so I think generally it's just a step in the right direction that the cap's been improved for not necessarily just first-time home buyers, but just buyers in general who don't have 20% down. That's a step in the right direction. The other two rules that have come to light, all of these going into effect around December, and all of these still up in the air right now about the finite rules. But the fact that, first-time home buyers, if you remember, I think it was earlier this year, they announced that if you're buying a new construction home, you can extend your amortization up to 30 years. Previously, that was capped at 25. So it allows the buyers to improve their purchasing power a little bit. The most recent announcement said that we're going to expand that not to just new construction homes. All first-time home buyers can extend their amortizations to 30 years. So these resale homes now get bundled in together, which opens up the number of options that these buyers have. The last rule is really about people who own homes today. Previously you could only ever refinance your home up to 80% of the value of the home. It was like a hard, stark rule that everybody had in place. They announced that you'll now be able to refinance up to 90% of the value of the home, backed by the insurance body, CMHC, as long as you're adding a garden suite or you're renovating your basement as an extra suite, which time will tell if that's the right decision. Going up to 90% on a refinance is a little bit scary.
Yeah.
Again, all in an effort to garner activity, to drum up the market, etc. And these are good things for prospective buyers or people who are refinancing. I just think a lot of these things happening at the same time might create the perfect storm. Again, time will tell. But I think generally these rule changes are good for prospective buyers and being able to unlock it as long as they're just not over leveraging themselves. And that's why there still needs to be protective measures in place to make sure people aren't over leveraged.
And I think they need to go through a lot of the rules still, right? Everything's still up in the air. They're still trying to figure it out.
Well, these changes were announced without the lenders knowing.
Yeah.
Like the lenders found out the day of the announcement. And so they're all in a scramble right now trying to update their systems, create these processes, et cetera, to account for this December 15th change. So there's a lot of moving pieces in the air. We'll probably get more clarity as we inch closer to this timeline. But December 15th onwards, we unlock a ton of potential for prospective buyers.
That's amazing. And then for first-time home buyers, is there anything else that they could take advantage of?
Yeah, there's still programs that are available to them. So the idea that there's a first-time home buyer rebate. So you're familiar with this, but if they pay land transfer tax, they'll be able to get a rebate on that amount, per applicant. A lot of people are investing in their RRSPs now in anticipation for potential purchases. The ability to pull out, the rules are going to increase it up to $60,000 per applicant without it being taxed and repayable over 15 years. There's FHSA accounts now. And so I think that these are a lot of different programs that are available for first-time home buyers to take advantage of. I think it's very important. You talk to a mortgage broker, you talk to your bank representative, whoever's representing you on the mortgage side will walk you through the details of the programs that are applicable to you. But there's a lot of things to be educated on to make sure you're making your best, your best foot forward on these purchases.
Of course. And again, going back to this newcomer conversation, I feel, for people that have been here for years, maybe been through this process before, they're very familiar. Right. You sort of know the products at the bank and you kind of take advantage of them. But I can only imagine, even for my own parents when we first moved here, how scary that must have been to, try to understand which product is the best for you, and then maybe, the language barriers and added, and then culturally as well, interest.
Yeah.
It's something you never really encountered, so it's, how do you feel that you can bridge that gap for them between yourself and the lenders or whatever the financial institution is?
Yeah, I think the lenders have a pretty decent grasp of it. I think a lot of them are developing newcomer programs to make it much more flexible for them to be able to qualify. So that exists in the lender space, and there's always an opportunity to improve. But the fact that it exists is a right place to start. I think on the education side.
Yeah, I think us being not from here as well, being immigrants as well, I think we can, take that, and appreciate that we were probably in the same situation. Our parents were in the same situation, when they were buying their first house, and, they kind of had to navigate. And I think that's how we started this brokerage anyways, because, the number of times that people, have, given us the wrong advice. And then we were like, hey, there's something that we can do about this. And yeah, definitely, when we have people come in for some home buyers, especially, they have so many questions, just like you said.
Understandably so.
And we're there like every step of the day, where we're like, hey, we're available like 24/7. Away.
I think that's like the most important piece to call out is like, we're not a bank branch. We don't cut off at 5 p.m. Bidding wars don't stop at 5 p.m.
Oh, exactly. Or the weekends.
Exactly.
Yeah.
So when we talk about like having someone in your corner, I think that's a very important piece. Somebody who isn't like rushing you. You're just another number. Like, have a conversation with me, understand my objectives, and walk me through every step of the way. Like, we have, there are people who will message us at 1 a.m. in the morning. It's like, I was thinking about this, and it's perfectly okay, because we imagine ourselves in the same position, right? So, again, I can't stress enough that team that you formulate, it doesn't have to be us, but I mean, just make sure, you're interviewing whoever it is that's going to be working with you to make sure that they have your best interest in mind.
And of course, you know this, but that communication was our driving factor behind getting the app, because we got so many questions, especially from people that are not from here. Right. Can we get on a WhatsApp group with everybody?
It feels like a black box, right?
Yeah, exactly.
What's going on? Yeah.
And that's literally what our app is. It's like a WhatsApp group. You can share documents, you can sign, message at 1 o'clock in the morning. Obviously, maybe sometimes we're not available at 1, but you'll always get a response as soon as possible. There's also no need to find what our phone number is, because just like on WhatsApp, you don't know what anybody's phone number is. You just press the call button or the video call button, and either it calls everybody in the group or it calls individually, however you have set it up. It's the exact same feature, and it just makes it so efficient, even from our end. Instead of me talking to the client, sending an email to the client, then sending an email to whoever's on the team.
It's not siloed communication. It's everybody's on the same page at the same time.
You're going to so many different things, and it's such a time waster for us. Whereas I will tag the person. I will say, here, client, here's your answer. Right. Tag the person on the staff that needs to respond to it. They'll see the message. It's all done at the same time. The client is seeing it. We're seeing it. The staff member is seeing it. So it's, everybody just gets to work instead of getting stuck on this routine of, I have to tell this, to do this, inform the client, do this, call. It could take all day.
And then it puts the client at ease as well, right? Because it's right there. They know it's visible and they know it's getting taken care of. And I mean, in today's day and age where we're so connected to our phones,
yes,
that instant, connection is so important, I think.
Yeah, I just think about like putting myself in the client shoes, right? Like this is probably one of the largest transactions of my life.
Yes.
It's
and the most stressful.
Anxiety inducing, it's stressful, and when you're in the dark and you don't know what's going on,
exactly,
it just amplifies that feeling that much more. So I can appreciate the investment in technology. I think what you've done with the app will only serve as a foundation for making that experience even better and better over time. But it's the right investment at the right time, especially for all your clients, and then the opportunity to connect with your realtors and your mortgage brokers in the future. To have everybody in this ecosystem, it's the right idea.
Yeah, and then everybody has an update. From the mortgage end, banks close at 5, as you said. So if they're with an A lender, is there an update at 4:59? Right. Nobody needs to make that phone call anymore. You literally just look at the message, hey, we've been funded, or, the money is here, or whatever the message is. It's all done in real time, and everybody sees the one message and gets organized on the back end. And then the client, as you said, they're informed. This is so stressful. They'll know right away. There's no need to be calling the office and
makes things a lot easier.
Exactly. Well, Fatema and Mohammed, thank you so much for being here today.
Thank you for having us.
Yeah, it was a pleasure, honestly.
Of course. It's been such a great conversation, and I hope our audience can learn a little bit more, take something away, and if they need to contact you, how can they reach you?
Yeah, so we can put up our website, voguemortgages.com, Instagram we're pretty active on, and we'll make sure to put our emails as well for people to get in touch with us.
Yeah, of course. Perfect. Well, thank you so much, everyone, and drive safe.
This podcast is brought to you by ALF LLP. We hope you found today's discussion insightful and empowering. This is a kind reminder that our content is intended for informational and educational purposes only and does not constitute as legal advice. Every situation is unique. So if you need legal support, we encourage you to book a consultation with one of our lawyers on our website, alfllp.ca. If you enjoyed this episode, don't forget to subscribe, leave a review, and share it with others. For more engaging conversations, expert insights, and practical advice, follow us on social media at @ALFLLP. That's where you can find our podcast, Law That Leads. Thanks again for listening, and more importantly, drive safe.